Treat a small trading account just like a gambling fund, and the market will gladly take your money. To survive those early stages, you need a strict 5-step mathematical framework. This system is designed to get you trading without immediately blowing your account. You don't need much to get started, just a computer, a valid ID, and the discipline to follow a set of rigid rules. Proper preparation separates those who donate their capital to market hype from those who actually build a sustainable trading business. Looking at this chart, you have 3 main paths into the market. Investing takes years, swing trading plays out over weeks, and day trading happens in minutes. Day trading is active and appealing, but there is a major regulatory roadblock. Under the pattern day trader rule, U.S. regulators require you to maintain a minimum equity of $25,000 if you want to execute frequent intraday trades. On the other end of the spectrum, long-term investing is generally safer, but it won't generate the active short-term income you are likely looking for right now. That leaves swing trading. It avoids the heavy restrictions of the PDT rule, and it requires significantly less active screen time. If you are starting with a $1,000 account, swing trading is the most viable strategy to navigate both your regulatory limits and your time constraints. Most brokerages advertise zero commission trading, but there is a large gap between a theoretical gross profit on your screen and the realized net profit in your account. The first hidden cost the market extracts is the bid-ask spread, the built-in price difference between what buyers are willing to pay and what sellers are asking. Then comes slippage. When markets get volatile, your orders will rarely fill at the exact price you clicked, skimming a little more off the top. Finally, there are taxes. If you hold a position for less than a year, your gains are taxed at the higher ordinary income rate. Look at how this equation plays out on a single trade. You start with your gross return. Then you subtract the spreads, subtract the slippage, and subtract your short-term tax rate. What remains is your true net return. If you fail to model these 3 costs into your system, your strategy will bleed money over time, no matter how perfect your chart setups look. Step 1 in setting up your actual account is selecting a registered broker and initiating the Know Your Customer verification process. This requires uploading your ID and banking details. Do not deposit actual funds into the account yet. Keep your wallet closed for now. Before capital enters the platform, you need to establish an absolute boundary for preservation. We call this the 1% risk rule. On this trading plan document, apply that rule. With a $1,000 balance, your maximum risk per trade is $10. Next, a daily limit catches your mistakes. 3 consecutive losses hit your $30 limit, or 3%. Once you hit that 3% limit, you shut the platform down. Ignoring this triggers revenge trading, throwing your rules entirely out of the window. Strict risk limits are your mathematical defense mechanism. They ensure a single bad day cannot wipe out your entire account. Now that your rules are written, you enter the mandatory simulation phase, paper trading. Log into your brokerage platform and look for the toggle to enter demo or paper trading mode. This gives you simulated funds to practice with. From here, you can execute a buy order based on a swing trading setup, placing your entry just like you would with real capital. But right after entering, you must set a stop-loss order. This is an automated trigger to exit the trade and sell your position if the market price moves against you. Notice how this works on the chart. You drag your stop-loss line down from your entry price until the calculated risk hits exactly -$10. That is your mechanical safety net. Practicing this over and over in a sandbox builds the mechanical muscle memory needed to accept a loss without the financial trauma of losing real money. You are now set up with a verified account. You understand the hidden costs of trading, you are focused on a viable swing trading strategy, and you are protected by strict risk limits. Before you move forward, here is your mandatory homework. You must execute 50 consecutive paper trades using these exact rules. And here is the unbreakable rule. You do not deposit a single dollar of real money until your 50-trade simulation proves to be mathematically profitable. This rigorous, unglamorous preparation is the true dividing line between amateurs making bets and professionals running business. Set up your demo account, write down your rules, and start your 50 trades today.